Welcome back, guys. Yes, what do we have here? You are given a projected income statement and you are expected to answer some questions. Let's look at it. You are provided with a projected income statement for Riverside Traders for January and February, 2 months. You are given the actual as well as the projected. We use a fixed markup of 60% of all sales. Right. Here's your projected income statement. Given to you, you can see there's January budgeted, January actual, February budgeted, and February actual. So you are given a projected income statement. Understand? You don't have to prepare it. Calculate the markup percentage that Cheryl uses for her business. Right. So now we'd say, okay, fine. Let's take the 240,000. Where do we get the 240,000 from? Watch. 240,000, my sales of 540 minus my cost of sales of 300,000 gives me a figure of 240,000. So therefore, 240,000, okay, which is my gross profit, over my cost. Again, let's look at the cost price. There's my cost price, 300,000. So 240 over 300,000 times 100%, because that's my markup that I'm using. And I get a markup of 80%. Now, obviously, what could you have done? You could have done the same with your February figures and you would have come to the same answer. So you could have used these figures here. I'm referring here to that figures here. You could have used that and you would have come to the same markup. So what's the markup we are using? 80%. Any other columns should give you the same thing. Next question. What's the probable reason for the interest income? Okay, so here's my interest income. What's the probable reason for this year? Why does it appear in my projected income statement? Can you see? If you look at your interest income, notice what happened. The actual was 12,000 and then it became 9,000. So obviously what had happened was your investment had decreased. Obviously, investments are based on the amount of the investment. The more you invest, the more your return. If you look at an investment and you see that the interest has decreased, the possible reason is that the amount of the investment has decreased. What's a probable reason for depreciation? Why? Let's look at the question in terms of what is asked. Where is your depreciation? Notice your depreciation was 10,000 and your depreciation is now 15,000. Something happened. Why did my depreciation increase? Obviously, the reason why your depreciation increased is because you had purchased more tangible assets. That is what happened. So obviously, if you increase the value of your tangible assets, other than land and buildings, which we know is not subjected to depreciation, but if you bought more equipment or if you bought more vehicles, then definitely the value of your depreciation would definitely increase. It says here, comment on the stationery, right? Let's go to the stationery and see what are we expected to comment on. If I look at my stationery, I notice that in January, I budgeted 4,000. I spent 4,000. In February, again, the budget was 4,000, but the actual amount was 7,000. Clearly, you can see something is not hunky-dory. How would you comment on something like this here? Your stationery was well controlled in January. Why? You budgeted 4,000 and you spent 4,000. No problem. When it came to February, You budgeted 4,000, but you spent 7,000 rand. Surely this is the problem. That means you went over the budget in February. Why? What's the reason for that? Again, any acceptable answer. This is possibly, not necessarily, but it is possible that this was due to wastage, or it could be due to theft, okay? Or there may be another positive answer. Can you think of it? You used February as a month in which you were going to send out extra leaflets. More printing and stationery was required. So, in that month, if you used more stationery, then it is perfectly acceptable. But obviously, you got to look at the question and see what it's all about. If you look at your telephone, again, abuse is apparent. Why? You went 2,000 over the budget and 4,000 over the budget in February. So definitely, this expense is not well controlled. Clearly, you can see that if you look at your motor vehicles, it is well controlled. The variance is only 10%, whilst the fuel price was increased by 25%. So you have to take all factors into consideration when you are looking at specific items. Here you have to look at stationery, you have to look at your telephone, and you have to look at your motor vehicle expenses. Compare the budget to your actual. See whether your variance is under budget or it is over budget. In this case, the variance was only 10%, and definitely if we look at the motor vehicle expenses, we can say that it was well controlled because we only went 10% over whilst the fuel increase was 25%. But I'm sure you want to know more. The place to be, Matrix Uploaded.